I spoke directly to Trading 212 to get you the answers to the questions that you've been waiting for. Here's what I asked. Why did you close to new customers? What's changed to enable you to reopen? Why so many new faces? Why are there now limits on the amounts of shares people can purchase? Are there any proposed changes in the charging structure for users in the future, particularly the Invest and ISA options? Trading 212 are a big name in the DIY investor space, having amassed 1.5 million users, have an enviable Trustpilot rating of 4.6 after collecting 20-odd thousand reviews, and now have somewhere in the region of £3 billion sat on the platform. But like any growing business, it hasn't always been plain sailing, ultimately leading to a time where Trading 212 had to shut their doors completely to new investors for quite some time. When all the YouTubers came out with their 2022 picks for who you should have your ISA with that year, they were a notable name to be missing. The internet was awash with speculation as to what it all meant, and without any definitive answers to the questions, speculation naturally ran rife. I am in the unique position of having a direct communication channel to some senior management at Trading 212 through my work with them on their YouTube channel, where some of you might have caught me dressed up as a chef trying to explain what a stock is. Yeah, what an interesting afternoon that was. Well, now that they are reopened to new investors, instead of whittling away the hours telling terrible stock-based cooking puns, I thought I'd use my position to get you the answers to the questions I know you've been waiting for. The questions that have been filling forums all over the internet for months now. I have those answers straight from the horse's mouth. So let's go through them, shall we? And let's cut to the chase and get straight to the big one. Why did you close to new customers? As we all know, 2020 was a crazy year, spiking extraordinary interest in retail investing. While all the brokerages in the UK and Europe saw a surge in new customers, Trading 212 was the fastest growing broker, outgrowing its competitors by a large margin. Some brokers chose to close doors as early as spring 2020 and had been closed for months until they felt confident they would be able to cope with the demand. Trading 212 was scaling quickly, but we did experience several instances of downtime, especially in November 2020. This was a painful experience, both for us and for our clients, and we took serious measures to prevent this from happening again. Then, the 28th of January happened. Despite all the optimizations in software, hardware, and processes, we could not cope with that level of unprecedented demand. We had to make a hard choice: continue with an inferior service, hurting well more than 1 million existing investors, or put our existing customers first and stop accepting new applications. There were plenty of other options people could go to. We chose the latter. So they talk about the 28th of January being quite a pivotal day that caused them all sorts of problems. To remind you, this was centered around the GameStop short selling saga, which was a pretty unusual event to say the least. In fact, it was unlike anything I'd ever seen, and I've been involved in financial services now for over 10 years. No business takes the decision to close the doors to the very things that bring in their profit lightly. So I went on to ask them, what's changed in order to enable you to reopen? We took the time to scale. And by scaling, we don't just mean technically, but operationally as well, done the right way. We've built up a larger team of professionals to ensure business continuity across all of the markets we operate in. We now have a global team to manage worldwide operations headquartered in the UK. It took time to build a team capable of expanding the business while coping with growth in the existing markets. While scaling, we saw Europe as an opportunity to test our new structure and processes, and to build up solid teamwork throughout the new organisation and teams, which is why we opened there first. Being a financial institution, if we wanted to be on the safer side, there were requirements beyond technical that we had to cover. And all that is to say that they've now laid much more solid foundations to cope with their newly found size. To give you some context on how quickly this business grew, you just have to take a brief look at the figures in their accounts. You can find their accounts here on Companies House pretty easily, and it doesn't matter what numbers you choose to look at, you'll find a meteoric and speedy rise. For example, it shows net profit at a £300,000 loss back in 2019, and then a £22 million profit in 2020, going up to a huge profit of £45 million in 2021. But whilst you're hunting round on Companies House, you can't help but notice a whole wave of new names that have arrived recently, which brings me nicely onto my next question. Why so many new faces? To operate at the post-2020 scale, we needed more talent, and we are grateful to have these wonderful professionals join us. Ideally, we would have expanded earlier, but expanding the team during the early days of lockdowns, among other things, proved to be challenging. We did use 2021 and 2022 to catch up. Okay, so that's a little bit about why they shut up shop and how they hope they've now put in measures so that will never happen again. But I also wanted to tackle a more recent issue, which are the limits that have been put on shares for people to buy. In case you missed it, investors are now limited to how many shares they can buy in any one company, both per order and the maximum overall position size too. Here on their website is a list of companies, and if you look at this column here, you'll see the max order number and max position size of the different instruments. So I asked, why are there now limits on the amounts of shares people can purchase? The limits exist to prevent excessive accumulation of shares in illiquid stocks. Unwinding a large position in a company that has very low trading volumes or hasn't even traded for weeks might be difficult. Furthermore, such accumulation is considered by the exchanges and the regulators as a risk for disruption of the market stability, and Trading 212 must comply. The limits are being revised on request, however. So for two reasons: to keep you safe, but secondly, because the regulator likes it. And that is someone that Trading 212 are very much going to want to keep on the right side of, especially given their newfound size as a company. The bigger you get, the more attention you get. Now, I want to end with a big question, and that's one around fees. I've often wondered, and I know many of you have too from reading forums and so on, about the fee structure for Trading 212 and whether this might change in the future. It's no secret that Trading 212 make most of their profit from the CFD style trading that's available on the platform, and this enables them to offer their ISA and invest options for no cost, and their famous strapline of commission-free investing for everyone. But will this always be the case? So I asked them, are there any proposed changes in the charging structure for users in the future, particularly the invest and ISA options? Absolutely not. We are aware that some speculate that Trading 212 plans to introduce more fees after we introduced the FX fee last April. We were reluctant to introduce it back then. Rest assured, we've been trying to take every opportunity that makes financial sense to reduce the cost of trading, and we will continue to do so, not the other way around. Of course, things change, and this is by no means a promise that it will never happen. The introduction of the FX fee is a great example of a new fee that wasn't there before, but it is still nice to hear that that isn't the planned direction of travel nonetheless. I hope that was useful and perhaps answered some questions that were previously unanswered. Remember, if you want to use Trading 212, then please use the link in the description below this video. If you do, you'll get yourself a free share. If you've got any other questions that you'd like me to ask them, let me know in the comments and I'll see what I can do. If in the meantime you'd like to watch me prance around in a chef's suit trying to explain what a stock is, then boy, you're in luck. Here it is, the first ever video I did for Trading 212. Enjoy.